This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Welcome back, value investors. So the coronavirus is back and it's dominating the headlines again. And we know what that kind of means for the stock market when there are restrictions and shutdowns or whatever you want to call them that start being put on either in Europe or in the US now. That means stocks get a little nervous and they get a little bit weaker. So this week before the elections here, the end of October, we're starting to see some sell-off in some aspects of the market here. And you know what that means for those of us who are value investors. This could be a buying opportunity in our favorite stocks. If you thought that a company was overvalued, even just 1 week ago, it hasn't taken much to have this little mini sell-off. Now could be your chance to get it on sale. Maybe not as much as you hope it could go on sale, but we don't know because this is only just the start or maybe the beginning of a little bit of a sell-off here. Could go cheaper, but for now, you are getting at least a couple percentages off of where they were just even a week ago. So stocks are really the only thing that we usually don't buy when they go on sale. So if you think about it, if any other item goes on sale, we tend to run out, on Black Friday, we'll be out there sometimes overnight camping out in order to get the thing on sale. But with stocks, even if it's, 10%, 20% off, we still don't usually love it. We still are kind of scared of it and we don't dive in. So this podcast is dedicated to getting us ready if there is further sell-off so that we have our wish lists at the go so that we can dive in and get some of the high flyers that we've been watching, but that maybe got a little bit too hot to handle. And maybe now is the time where we can buy the dip, so to speak, or the bigger sell-off if we get it. So where am I going to look for deals? That's all up to you. But there's a couple areas that I've already seen some not significant weakness, but it is definitely weaker in these certain areas. And these were some of the hot areas. So you can really see the weakness when it does hit. So the first area or industry that I'm really seeing some of the weakness in is in the semiconductors. So I took a look at the iShares Semiconductor ETF, the SOXX, because everybody tracks that. It's still up 21% year to date, and it's still up 3% on the last month, but it is down 5.4% in the last 5 sessions here. And we're recording this on October 28th. So heading into the end of October here, you've seen the weakness come in on the semiconductors. Some people cashing in their profits there and moving to the sidelines, not surprisingly, because it has been so hot. So I took a look at 2 names there. These are the hottest names that everybody has been buying in the last let's just call it the last year or so, but even longer than that. So Advanced Micro Devices is the current kind of favorite out there among you chip buyers. AMD is the ticker, and it's down 6.1% over the last 5 days, but it's had this huge rally. It already reported earnings. It said it's buying the Xilinx. Things are still going well there, but it is now trading at 71 times forward earnings. So it's very pricey here, even with this pullback at 6.1%. But it's only going on your wish list so that you can watch it and maybe get it if it goes down further and you get it further on sale. So Advanced Micro Devices is one I'm watching, AMD. My second stock is NVIDIA, NVDA. I currently do own it in the insider trader because an insider has bought over there recently. And so we managed to get into it over there, but that one too is down 5.5% over the last 5 sessions. It hasn't reported earnings yet, so we'll see what they say and if it can get a pop on that, or if the sell-off, just abruptly ends and things start rallying and going back the other way. But it's trading at 58 times, and it has been expensive for quite some time, but This is getting up there a little bit when it starts to get into the upper 50s and the 60s and the 70 time earnings level. So any kind of pullback, it could be a nice chance to get in there and get it a little bit on sale. So NVIDIA, NVDA. Now switching over to a second sector that has had some hot companies that were pandemic plays in there. When we're all sitting at home and we can't go out to the restaurants, we were ordering in, and these three have stepped up their online delivery game. And it's not surprising that these are soared this year, but they now are starting to pull back as well, even though the coronavirus is back in the headlines. So the first one in this hot sector, which is the restaurants, obviously, is Wingstop, ticker WING. And I've been a big fan of Wingstop all this year. I didn't really get it until I ordered it. And yes, I've ordered it several times. And the wings are tasty. They do know what they're doing there. And this one already pre-announced its third quarter same-store sales. It hasn't announced earnings yet, but that's coming shortly. By the time you listen to this, they might have already reported, but they pre-announced same-store sales and third quarter up 25.4%. This is for the quarter ending September 26th. That's on top of last year's same-store sales that were up 12.3. So these are just tremendous numbers. They were already doing tremendous double digits last year, pre-pandemic, but to see it happen again, and this is after the other restaurants have all opened. This is third quarter. Now, the June quarter, that was the pandemic quarter when they didn't have as much competition. That same-store sales was up 31.9%, so even hotter, but I was not expecting them to continue with this hotness into the next quarter because, again, the other restaurants and their competitors had reopened and you could go out to the restaurants and eat outside at least, and partially inside in most places. So, but Wingstop still grabbed a bunch of new customers during the pandemic lockdowns who, like me, enjoyed the product and were coming back again for more. So what will they say on the earnings call? We will see, and maybe they'll give some color on what's happened since the end of the third quarter. But if there's more restaurant restrictions like Chicago has now put on again, this is the type of company that will do well. So why is it weak? I don't know. But since they pre-announced, the shares have really pulled back off of their all-time highs. And just over the last 5 days, they're down 4.2%. Over the last month, they're down about 9%. But they're down further than that off of those highs. And some of that is just because the expectations are so high now. And then you see these numbers like, oh, they did 31.9, and then they only, in quotes, only did 25.4. Well, that's tremendous, as I said, 25. Oh, nobody else has done 25 for that quarter, nobody. But it wasn't as good as second. So the street looks at it and says, oh, no, it wasn't as good. Things are getting, on the decline. But that is proving to be an opportunity for those of you who were waiting for a pullback on Wingstop. Now, yes, it's pulled back, but it's still insanely expensive here. It's trading at 99 times still, even with this pullback. So that's why I'm saying some of these stocks are good for the wish list. And if the weakness continues or picks up steam, then this is a type of stock that you want to keep watching so that you can get in there if we see a March or April scenario with a bigger pullback. So keep that in mind. Wingstop, WING. Now, one of its big competitors that also was a big beneficiary was Domino's, ticker DPZ. This also went to all-time highs. It's not quite as weak. Over the last 5 days, it's only down 2%. And over the last month, it's down 7.5%. And 3 months, it's only down 0.7%. So it's kind of hanging on to all those gains. But it, too, had a phenomenal third quarter, up 17.5% in the U.S. versus 2.4% last year. I didn't think they'd do this well for the same reasons as Wingstop, because everything has reopened, but people were still ordering the Domino's. And what will they do now with these restrictions coming in? Domino's is cheaper than Wingstop. It's only trading, as I say, only at 31 times. But if Domino's were to see a bigger pullback here, that's definitely one I want on my wish list. Now, I also had Chipotle on my wish list. And this one is also showing a little bit of weakness here. CMG is the ticker there, in case you don't know it. It's down 4.4% over the last 5 days. Over the last month, it's up, but only 1.3%. This one used to trade around 40 times or 50 times, and I used to complain about how expensive it was then. Now it has a forward P of 119. So still surging. So why is Chipotle doing so well here? Why is everybody diving into it? Well, they have figured out delivery using the various delivery apps, and they now have really launched a push for their loyalty program where you can order on the app, you can have it ready to pick up, and you just go in and it's on this little kind of bookcase thing under your name, and you just pick up the bag and you walk out. I am one of the ones they've added in recent quarters as a loyalty member. And I think they had 17 million. That's pretty strong numbers that they're adding every quarter now to this program. And just anecdotally, I was out in a city in Illinois that had already had the indoor dining restaurant restrictions put on a couple of weeks ago, actually, because their COVID cases have spiked more dramatically than some other parts of the state of Illinois. And so I was in this town and I needed to eat as well. And so I said, I'll drive over to the Chipotle. And it was a Saturday afternoon. It was crowded, people going in and out. They have no indoor dining. They had no drive-through at this particular location, but people were just going in to pick up with their orders on the little bookcase thing. And some people were still waiting in line to order that way too. So Chipotle looks to be a winner, even if you have further restrictions coming on. People are still ordering online or picking up, that kind of thing. So I'm watching this one. If it gets a bigger pullback here, then I might be interested as well for the longer term play of what Chipotle could do and where they can expand to. So what about some other beaten down areas like energy? I've talked about them many times, but on this podcast, I really wanted to focus on the companies that were basically crushing it in 2020, because those are the ones I really want to get on sale. Why not get the best companies on sale if I can? Not necessarily the worst, but I'll be doing other podcasts about the beaten down industries to see what's going on there, especially if this pullback or sell-off, whatever you want to call it, continues here on these coronavirus headlines. So I did take a little peek at the energy because I have been watching it. So the E&Ps, the exploration and production oil drillers, were the big one of the big winners off of the coronavirus lows in the spring. So they got sold into almost oblivion, and then everybody came in and bought on the lows, and some of the stocks tripled or quadrupled during that rally. But now they're giving it all back, and a lot of them are down significantly off of that rally. And I think some of them are going to test those coronavirus lows possibly. So I took a quick look just at one of the best names of the bigger E&Ps, Pioneer. PXD is the ticker. I've talked about it many times. It's down 3.8% over the last 5 days. Over the last 3 months, it's now down 16.5%. It's not down as much as some of the small E&Ps who are really getting hit hard here. But again, they could retest the March lows. So they're trading around $82 right now at the time of this podcast on October 28th, 2020. And the March low was $48.62 or thereabouts. And so it's got a little ways to go before it gets to those March lows for this one. But with these fierce rallies off the lows, you just have a lot of people who are in it to trade it. a lot of them don't want to lose all their big gains and their profits. So that's why you're starting to see some momentum building up to the downside now on these energy names again. And that's why I think a lot of them could test their March lows again. So that's something to keep in mind. I'm not adding these to the wish list, so to speak, because that's not really what they are. They're on the watch list, however, where I'm watching them to see if they get sold off into, the doomsday scenario again, like they did in March. Then for traders, it might be worth getting in there again. But the wish list is really about the best performers. These are the ones you wish you had bought in prior sell-offs or several years ago, whichever the case may be. Or you wish you had bought them in March or April when we got the big sell-off, but nobody knew how long or what was going to go on with the pandemic, how bad it was going to get. So a lot of people, myself included, stayed on the sidelines with some of our wish list stocks, waiting for it to maybe get even lower, and then it didn't. The rally came in fierce and quickly and never looked back at that point. But could we be seeing the look back here now? Could we be seeing the possibility of a bigger sell-off here than what we saw in September when we did see, that S&P 500 weakness in September? We don't know. It's only, been a couple of days into this sell-off here. So I did want to take a look at the earnings outlooks for some of these, because that's what the wish list is for. It's for the companies that do have the earnings growth, not the energy stocks that have the earnings decline. Some of the retailers that also have the earnings decline, right? Those are on the watch list. But the wish lists are the ones that, again, as I said earlier, are crushing it. But now they may go on sale. And so we may be able to get in much cheaper. So Advanced Micro Devices, AMD, 2020 earnings are expected to be up 73%, 2021 another 45%. That's the justification for the sky high PE ratio, right? But if I can get those earnings for cheaper, I would be excited to do that. So I'm waiting for bigger pullback here to get that double-digit earnings growth cheaper. NVDA looks similar. Fiscal 2021 up 57% for this year. 2022 up 21%. Wingstop 2020 up 72% for Wingstop. That's tremendous. 2021 keeping it hot at 17%. Domino's 2020 earnings growth of 30.5%. 2021, however, analysts looking for just 2.7%. And that could be because, one, they thought the pandemic may be over, so some of the sales growth would cool off. Or two, some of the sales are just kind of pulled forward, obviously, because of the pandemic. And then, as I just mentioned, there's no need to still be ordering it by next year. But they're being a little cautious there with 2021. So we'll see on that one. Chipotle is the only one expected to be down this year, down 22%, because at the beginning of the lockdown, they did see a big hit to earnings, and they did see increase in costs with labor costs and PPE and various other things. But a big rebound for 2021 now that they've figured out delivery and the app and the loyalty program and all of that. It's up 91.5%, or it's expected to be for 2021. So they made $14.05 in 2019, expected to make $10.92 here in 2020. So that's the 22% decline there. It's not horrible. 2021, though, huge rebound up to $20.92 a share there. So nearly doubling what they're doing this year. Analysts very bullish on the future of Chipotle, which is why when it goes on sale, we might want to get bullish too. But at 119 times and being a value investor, I just can't go there at that level. I just cannot. So I've never owned Chipotle. Even when it sold off big, it was still very expensive on a PE level. So I never owned that one. I used to own Domino's, but it's been a number of years now. So I sold for profit, but I didn't get as much of the rally as what those shares have done. And I've never owned Wingstop, but I'm liking what they're doing and their expansion model. But they, too, are just too pricey for me here at 99 times. So, but I'm seeing those shares pull back on these great numbers. So we'll see how that turns out. But remember, the wish list is just that, the wish list. It's fun to dream about the stocks being cheaper, right? But on the flip side, you have to know to buy when they go cheaper. And that's the harder thing. It's sometimes hard to buy on big sell-offs, as we saw in March and April when there's fear everywhere. So we're starting to see a little bit of fear percolating up again. But for value investors, that's the time when we can get them on sale. So let's see what develops with this little mini sell-off and if it picks up steam. And we'll hopefully be ready this time with our list of good companies, the ones that are, the top of their industries. That's what we want from the wish list. We want to get them on sale, and hopefully we can do that this time. So let me recap the stocks again that I covered. So there was Advanced Micro Devices, AMD, NVIDIA, NVDA, Wingstop, WING, Domino's, DPZ, Chipotle, CMG. I talked about Pioneer, PXD, but I'm going to do a whole episode on energy, especially if it looks like it is going to retest those March lows. Keep an eye on WTI because that's going to drive everything in that sector. But more to come on stocks that may have more value. We may get a chance again, value investors. So be alert. And keep subscribing to the Value Investor Podcast so you don't miss a single episode as we cover everything that's going on in this economy and what's happening with the coronavirus, because that's what 2020 is all about. But you want to subscribe. If you're sitting around at home, listen to some of our old episodes. You can get them on Spotify. You can also get them on Apple Podcasts, and you can get the Market Edge podcasts along with the Value Investor on SoundCloud under Zach's Market Edge over there. Just type in Zach's Market Edge to find all of those episodes and subscribe, but get us somewhere. And I'll see you again next week with some more values.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.